Yo, good morning, everyone. Welcome to the morning show. This is Stock Market TV. I'm Spencer Israel. We've got Steve Strazza. JC's still on the ground doing channel checks in Disney. Maybe he'll join us for a quick segment. Maybe he won't. You'll have to stay tuned to find out. Today's guest, Adam Kos. He is the president of Libertas Wealth Management. He'll be on at around 9 o'clock. And to all of you in the chat, welcome. Good morning. Hit the thumbs up for me, please. And it's 8:32, so that means we just had CPI. So maybe we'll just talk about that. I'll bring Steve on, and then we'll talk about other things. The Mag 7, maybe. Who knows? So JC's gone. You want to talk some economic data?
Take advantage of this moment. What do we got this morning? Inflation?
We had CPI, let's see, month over month, 0.1%, expecting flat year over year, up 3.1% in line with estimates. Core month over month in line, core year over year in line. Pretty in line report. That's about as in line as it gets.
And, we look at things like the dollar that might move from something like this lower here. Yeah, lower pretty good. 0.5%. Rates down a little bit here this morning. And for all you gold bugs, gold's doing nothing as usual. So seems like a pretty muted reaction. What's higher, Spencer? You know what is higher here this morning?
I would love to be able to answer that question, but I am locked out of Thinkorswim and I can't get in. So I have no idea what is higher this morning.
Stocks are higher again.
Oh.
Going for what? This big weekly win streak that we're starting to hear a lot about?
Yeah, 6-7 weeks in a row.
This will be 7, I think.
Yeah.
And altcoins are higher.
Okay, cool. If anyone has any advice for me on how to get into my Thinkorswim, I would love to hear it. I can't even log in. I'm locked out. I don't know what to do.
How did you let that happen?
I don't know. I guess I have to call them or something. What's going on? I have no idea. Okay, so I'm flying somewhat blind this morning without real-time data in front of me, so I'm going to rely on Steve and you all to tell me what's actually happening out there.
Spencer, speaking of what's happening out there,
yeah,
what is going on in New York, or should I say New Jersey?
Huh?
Did you tune in last night? See what's happening out here at the Meadow?
With all the chicken parms and the chicken cutlets? Is that what you're talking about? Hey, ha-ha!
Tommy Salami and the G-Men.
Yeah, I know.
Wins.
I know. He is. He is like Jersey's favorite son right now. It really is remarkable. Like even the Jets fans are kind of coming around, right?
Hey, NFL, who needs Taylor Swift when you got the DeVito family?
Dude, I mean, his dad was there with his agent. I mean,
did you see his agent?
The guy looks like he just walked out of like a mafia meeting. It's unbelievable.
Fun to watch, though. Really fun to watch. God, he's kind of brought the momentum back to New York, even if just for a couple of weeks here, it's been fun. So last night was a great game. And you know what? Just real quick, I don't think he's a long-term guy, but he played great.
No one thinks he's a long-term guy.
Listen, you're going to start to hear that after the way he played last night. He missed a couple. He had a couple errant throws on like the first 5 there, but then he was pretty much perfect. I think he only had 4 incomplete passes all game, no turnovers, which is what really matters.
Mm-hmm. That's right. All right.
Not afraid to run.
T Burnett says I have to uninstall and download again. Wonderful. That's what I'll be doing after the show's over here. So I have no futures, I have no charts, but I've got Steve, and that's all I need. So CPI in line. Pretty much a snoozer there. Not much to say about it. You want to talk state of the markets because you have some very interesting charts about the Magnificent Seven, and I think I don't want to say they're flying in the face of what we've all been saying, but they definitely put the performance of these 7 in perspective and context. So I'd like to talk about that.
Let's go.
All right.
Yeah. Oh, I got some good charts here.
Oh, yeah.
Fonz, you're the best. So kick it off with the heat map. I hate this first one. This is, yeah. All right. So this is what happened yesterday. It was a great day for the market. And the indexes, everything was so good under the surface that even though, look at the biggest stocks. And this red area over here on the left is probably half of the NASDAQ or more.
Yep.
Right? It's probably more than 50% of the NASDAQ. I don't know the math off the top of my head. It's always changing. I would guess it's more than half. NASDAQ was still up almost 1% because everything else outside of your Apple, Microsoft, Google, Amazon, your Magnificent Seven, everything else was up huge.
Okay, so
yeah,
can I offer what I think is a pretty basic explanation as far as why half was red and the other half is green? So whatever was leading, either the 7 stocks on the left, or it was probably the 7 stocks on the left were all down. Okay, so what has to happen? So the math all has to even out at the end of the day, right? If you have 100 stocks in an index and the top 7 of them are up a certain amount and the index is doing a certain thing, then by definition, the remaining 93 stocks have to do the other thing to even out the performance, right? This is like basic.
You're making a huge assumption though, which is what? That the money that comes out of one goes into another and not into cash or not on the sidelines or not in the bonds, right? Which, go ahead. But that
no. But if the Magnificent Seven are doing one are down and the Qs are up, then by definition,
everything else is up.
Everything else has to be up to make up for the 7 that are down.
Okay.
Right? This is basic ETF arbitrage. Sure.
That's it.
So, yeah. So what I'm saying is there's nothing really extraordinary about this, right? It's just like sort of market dynamics.
No, it's not extraordinary, but go to the next heat map. It's going to make it look even more clear. The point I'm trying to make.
Okay.
The selling was incredibly selective in these big winners, right? So what's happening? We talk about this rotation that is likely coming. When exactly it happens, who knows? If something is this well advertised in markets, everybody's talking about eventually taking profits in these winners, ideally January 1, because then you can pay taxes a year later. But do you think the biggest institutions and the best hedge funds who have been in these names all year and probably don't need to window dress, in fact, they'll write their annual letter and brag about how they dumped these first, took profits, are happy to pay the tax, and rotated it into better stuff. They're just front running this rotation that everybody thinks is inevitable. And you see it here with these. This is just profit taking. When you look at a chart that looks as good as any of these, Apple, Nvidia, Microsoft, right? It's just, I think it's very obvious profit taking. How much more of it do we get before year end? I don't know. But what's really, really bullish and constructive, and the big takeaway here, is the sea of green outside of those biggest names. This is going to do a lot of things at the surface level. If this price action were to persist over longer time frames, we're just talking about one day. This was just yesterday. Okay. But this is how things start, right? These huge bifurcated days, right? You kind of see the volatility or the dispersion between the winners and the losers blow out when a big rotation is coming. I think that yesterday was just a good example of that. The bigger point is that all of this money that's coming out of the big guys is finding a home in everything else. And that's that broadening participation or breadth expansion that we really didn't have most of this year. That's that thin bull market that everyone complained about. This fixes that problem, right?
Right. You can't have it both ways. You can't complain when it's just 7 and then also complain when it's everybody else.
That's what I'm getting at. Because now you're going to hear people, right? If this were to persist, you're going to hear the complaints about how the indexes aren't doing much. Or maybe the indexes are dead in the water, right? Again, I'm just really, I'm guessing. But if these guys are to stop participating or act this way over longer time frames, even if the rest of the market's up, indexes aren't going to look as good as they did last year. Right? NASDAQ 100 probably isn't going to have a record year without these guys leading. It doesn't mean that it won't be a sea of green beneath the surface and that there will be plenty of opportunities or more opportunities, elsewhere than there was, say, for the past couple of quarters. So not bearish at all. Now let's dive into the Magnificent Seven and look at just how ridiculous things were this year. So JC's not here to jump all over me. It's not just 7 stocks. And I'm not saying that. But these 7 stocks,
hard to ignore.
Perspective, were just about everything when it comes to index performance, right? We can find other names beneath the surface that are up 2, 3, 4x this year that are in these indexes. They just don't drive these indexes. So when you remove the Magnificent Seven from the S&P 500, 6% this year. 6%. It was a very muted year. That's actually like the average return going back to the 1950s.
Yeah, I was gonna say that's pretty standard. There's nothing wrong with that.
Right. So it wasn't some blowout year, right? The rest of the market just pretty average year. Maybe they have a blowout year next year. And this blue line on top that was up 100% on a year-to-date basis, the Magnificent Seven, literally 20 times the performance of the S&P 500 without the Magnificent Seven. Maybe the blue line's on the bottom next year. Pretty muted sideways year, right? Consolidating all those gains from last year. And then this black line, the S&P 500, so everything that's not the Magnificent Seven is up 100%.
Catches up, maybe.
Right? Why not?
Yeah, since JC is not here, if you really want to have fun, you could say it's not just the price performance of the Magnificent Seven or the contribution to the index, it's the earnings growth too. If you look at that, you want to have some fun with earnings. The earnings growth is coming from 7 stocks. That's the point people are making, right?
And I think, and I wanted to talk about today. We have so much to talk about, though. I think we'll dive into it tomorrow. Broadcom was up 9% yesterday. I don't know exactly what it was. They announced some new partnership, but I think it was the Citigroup sell side note. We're going to talk all about Broadcom more tomorrow. I was digging into the fundamentals of this company. So good. I'm going to bring some FinChat and Stratosphere charts tomorrow. We'll do some fundamental charting. But I just didn't have them ready for today. But this was the big winner that everybody was dumping into. Interestingly enough, it's the next biggest stock outside of the Magnificent Seven. And from a fundamental standpoint, I mean, what these guys are doing is just so exciting. I think Citi came out and said they're going to hit peak earnings like 2 years out from now or something. So it's still a nice run.
Did you say that this is the 8th largest stock in the index? Is that what you said? This
company is huge now. So
there's no way. I don't believe that.
Yeah. Go back to the heat map, my friend. So in the NASDAQ,
we had it 2 slides ago.
number 8, and by a long shot.
Wait. I'm sorry. Which index we're talking about?
NASDAQ 100. It is number 8.
Oh, okay. Yeah, that I believe. Yeah, not the S&P, but sure, that makes sense.
S&P, it is
what, 12?
Still up there. It's number 16.
Okay, yeah,
it's a big one. Hey, you know what else they were taking profits in yesterday? Eli Lilly. Same theme. Like big winner. Everybody's been in it. The institutions have been all over it. It's time, right? So they're just feeding the ducks a little bit, taking some of that, some of those gains out of their winners and just moving it into other things. They're not moving it to cash. They're not moving it into money market. Definitely not going into bonds. It's going into other stocks. I think that makes plenty of sense. We continue to see risk appetite kind of tick higher. I want to look at this equal weight versus cap weighted. Oh, no, hit the Magnificent Seven chart first, right? Because we talk about this overhead supply zone. That a lot of indexes have been slowly working through starting in June, which would be the first peak before that little rectangle up at the upper bounds of this base on the right-hand side of the chart. So the relative trend got the breakout, but now it's starting to look like some of those relative ratios that we talked about yesterday morning. Remember the growth versus value, the NASDAQ versus S&P looks very similar. Makes sense because that's what those ratios are. We were trying to make that point, actually. It's just the Magnificent Seven driving them. I think, just like we're saying the growth versus value ratio and the NASDAQ versus S&P ratio might retreat from this logical level, this one will too. This one will probably lead the way. Maybe it never even breaks out on an absolute basis. Maybe it takes longer to break out on an absolute basis than some of these indexes. What you don't want to do is make the bet that this one's not going to break out. If you go look at semiconductors, flip up to semiconductors next, and then home builders, right? These other leadership groups, and think of the Magnificent Seven index just as a leadership index, right? So you see the semiconductors have gone what a day for semis yesterday. Like the most blatantly obvious bull market tape you'll see is just semiconductors up 8, 9, 10%. Large cap semiconductors. I mean, this group was just red hot yesterday. Home builders are another leadership group. If you zoom into a chart of semiconductors, it looks just like this. So you don't want to, now back to the Magnificent Seven, you don't want to make the bet that it doesn't eventually work through this resistance level and get through these old highs, right, and resolve this consolidation. But maybe it takes some time. And just like these other groups, that have taken, I don't know, half of a year, almost 6 months to work through it, maybe the Magnificent Seven just needs another 6 months or something like that. So I would be patient with these stocks. They've been so good. And then I would just, do what the money flows and the tape is suggesting, which is rotating into some of these other names, which are really, really waking up and starting to show outperformance that can last, sustained outperformance, because we're not just getting these reversal patterns on an absolute basis when we look down the cap scale into other tech names or value names. We're also getting reversal patterns, which we talked about yesterday, on relative terms, which would indicate leadership or outperformance over longer time frames. So I think it's important to just be aware of kind of the dynamic there. It's not a bad thing if these guys stop leading, but you'll probably hear about it. You'll probably hear about it on the news and in the media that the indexes are dead or that the equal weights are outperforming. Throw up the equal weight versus S&P quick. So in that world that I'm describing, this chart, equal weight S&P 500 versus the cap weighted S&P 500, moves up and to the right, digs in, kind of holds this support level. And this is kind of the same thing as those growth versus value or the Magnificent Seven ratios, just flipped upside down, right? What we're saying is the rest of the market is going to kind of take the baton and start leading the way here. It's bullish stuff, Spencer. What do you think?
I think it's certainly possible, right? I mean, yeah, after the year we've had, it, for a period of digestion in these big names, this would seem normal. You could argue we've already had a little bit of what you're talking about, right? Just a taste of what you've been talking about in terms of the top of the market or the leaders, going sideways, and then or at least taking the back seat to everybody else. But I think what we've been saying this whole time is that even if there are 7 stocks leading the way, there are other ways to make money, right? And so this is just sort of a continuation of that idea. And to me, it's like, what is the implication of when you say Magnificent Seven, what are you implying? Because I think when people say that, they imply different things, right? You have to sort of look under the surface. Are they implying that there's only 7 stocks worth buying? Are they implying that the rest of them, that the 7 stocks are the whole market and you should just forget everybody else, or they make up all the gains, or what is the implication of the Magnificent Seven?
Usually it should be to illustrate the point that participation was thin, or really better, the point that I just made, which is when it comes to index level attribution. In other words, who is contributing the gains at the index level? When it comes to that, yeah, you could say it's only the Magnificent Seven, but that's not the same as saying that the Magnificent Seven are the only stocks working.
Right. And that's what gets lost. That's what gets lost, because maybe when you look at it from just on a pure market cap basis, then sure, it looks that way, doesn't it? Right. But if
Coinbase's fall or Uber's fall, that's a good example, that they're just not even in the index. They don't count. They score 0 points. You get what I'm saying? So it's easy to be misled with the whole Magnificent Seven spooky conversation, but a lot of people can, try to kind of express it honestly, which is what I was trying to do here.
Yeah, no. And of course, these 7 companies they're so big that, of course, when they move up a couple percentage points, it's going to dwarf the performance on a market cap basis than everybody else, right? Because that's just how large numbers work. But as we've gone over time and time again, there's depth, there's breadth, and there's other ways to make money, right? It's not just 7. It's not even just stocks, frankly. I mean, there's other things happening.
Of index construction, throw up chart 17 here. Let's get this headline out of the way. You know I love these.
What is this? I don't even know what we're talking about.
We're not done talking about Lucid yet.
Oh, yeah. Baby out with the bathwater on this one. Just get all the bad news out in one day, why don't you?
So CFO Sherry House, goodbye. What do you think? It's just never good. It doesn't mean that like the books are cooked. It just CFO is out. Good companies, go look at how long the CFOs hang out there. 10, 20, 30 years. They never want to leave.
So what was there, like a dozen or so EV companies launched during the COVID bubble? And probably one of them will end up being a great investment. One of them. A handful have already shut down. Lordstown Motors.
Yep.
There's one called Electromechanica. The ticker was Solo. They're near the end.
What about Workhorse? Is Workhorse gone?
Workhorse, that was with Lordstown, so yeah, they should be gone. I can't check, right? But you can check for me. I think they're gone. And then there is, of course, Real Beginning, which seems like they're doing okay. Shoot, who else was there? So there was a couple. Oh, there was our favorite, Nikola, which is obviously long gone.
They're still around now.
I mean, they're around, but in terms of the stock, I mean, it's gone, right?
So is this how it's supposed to work, or did the NASDAQ selection committee kind of make a mistake here? They only do this once a year, so they added Lucid to the NASDAQ at the peak in December of 21, and now just 2 years later, and a 90+% drawdown, they are removing it.
I'm sure there are some rules in play, and maybe they followed their own rules. So I'm saying maybe it's not their fault. Maybe it's just the nature of the rules of the index, right?
I don't know, because I would think that they have more than one option, right? And that they probably didn't choose other companies to put this one in, right? Like I'm sure they do have requirements, but I'm sure they have a pool of stocks that meet those requirements, and then they have to pick. I don't know. It's just, this was the only SPAC in the NASDAQ 100, and it's also the only company in the NASDAQ 100 that looks this way. So I don't know. Maybe think twice before you add a recently SPAC.
Is DraftKings not in the NASDAQ? No. Okay.
It's a small stuff.
They really? Oh, all right. No, I mean, this is a pretty remarkable chart. Yeah, I can't think of any other examples like this.
Lots of words. It's so remarkable.
I mean, look, yeah. I guess I suppose if your time horizon's long enough, anything is possible. But oh boy,
you said they removed Align also, right?
What?
Align Tech.
Yeah, ALGN, they're out.
Yeah, so outside of like Lucid, Enphase, Align, pretty much all 20 billion plus market caps.
All right,
most part.
Yeah, I'm willing to give the NASDAQ 100 index committee the benefit of the doubt in that they probably felt compelled to add this based on the rules that they have in place. But of course I don't know what those rules are. I'm sure it seemed like a good idea at the time, right? So, to me, this doesn't really say a whole lot about NASDAQ or the index, but obviously the chart speaks for itself in terms of the performance of the stock. So
let's get some more news.
You want more news? We have more news. Where should we go? We did have a notable earnings report. We had Oracle out last night. We can go there.
They didn't like it. I don't think they liked it.
Yeah, all right. Let's talk about Oracle. So, talk about old value, stodgy tech. Do we have the Oracle chart? I thought we did. I think we do. Well, in any case,
I dropped so much in the chat.
I noticed. It was overwhelming. We do not have the Oracle chart, but that's okay. Earnings beat, sales missed. Let's see. What do I have here? Demand for cloud infrastructure and generative AI services are increasing at an astronomical rate. Yeah, you think? And then let me see what I have here. I have cloud revenue up 25%, cloud infrastructure revenue up 52%. Okay. I mean, based on the headlines, it looks okay.
What's the stock doing?
Top line miss, bottom line beat, which is always interesting. It means some, as they work down your way down the sheet, maybe some adjustments happening. But I don't know what the stock is doing. I do know it's down 9%. So I know that much.
Big move for such a big cap company. Yeah,
yeah.
Still
Oracle
messy, but I will say, if we did have the chart, you could draw a very clean line of potential support at the 2021 highs right here, right around 105, and then if you want to make that a little zone as a risk level, you play it right down to the pivot lows, right, just from late October, spooky Halloween lows, which brings you right to that key psychological 100 level. So it's 100, 105. Looking to enter Oracle and get some exposure, some more exposure to this big cap tech trade. You do have a level to do it against, at least.
Has there ever been an academic study on CFO tenure and stock performance? Probably.
Do it and let me know.
Probably. I mean, there's studies on everything, right? Isn't there? So I would just assume there is. I haven't seen one, but I'm just assuming there's one out there. There are many studies about buybacks and stock performance, but I have not seen one on CFO tenure and stock performance.
I don't think you even need a study. If there's no CFO, you got to go. It's no good. You don't need a study. Let's stick with big cap tech. I want to read this about NVIDIA. So NVIDIA sees, follow up on the headline that you mentioned yesterday. NVIDIA sees Vietnam as a potential second home. Reports say NVIDIA Corp's chief executive officer, Jensen Huang, sees Vietnam as a potential second home for the Silicon Valley company, and that it plans to open a legal entity in the Southeast Asian country, according to Vietnamese media. NVIDIA has already invested about $250 million in Vietnam. The government's news website reported on Sunday, citing information from a meeting between Huang and Prime Minister Pham Minh Chinh. Pham Minh Chinh.
Okay. Yeah. I mean, we talked about that yesterday.
That's a big move. Big company, right? It's a big investment. So that's awesome. I think more companies probably follow. They are the standard setter now, right?
Yeah, there was a very good profile that I did not read on Jensen Huang in the Journal over the weekend. I started to read it and then I just decided I gave up. But it seemed good based on what I was seeing on Twitter. A lot of people read it, but I did not. So can't speak to it.
You want to read this Eli Lilly headline from yesterday?
Oh, that's the thing I wanted to mention. Is you mentioned Eli Lilly being down, and there was some news related to their trial that people that had stopped taking their drug and had switched to the placebo had regained weight. I guess the implication being that if you take the drug and stop, you won't keep the weight off, which to me seems that, well, it's not about whether it's not good or good. It seems like it proves that the drug works, right? That's my interpretation of it, because you need the drug to keep the weight off. But also it's not really a surprise. But because you were mentioning the performance of the stock and they had that headline, and what I was going to say was there was very often, it could be a coincidence if you don't care about such things, but like when a stock goes down, very often there's a negative headline. You had one on Eli Lilly. You had one on Google yesterday. Yeah, you had one on Mega Cap Tech. They lost a antitrust case about their app store, right, to Epic Games. So, negative headlines, it can cause things to go down. Who knew?
I think it's almost, for me, and you're right. The other side of this is that what does any drug maker want at the end of the day is to invent that drug that you have to take forever. Yes. It seems like pretty kind of obvious here that, if you stop taking this, you're going to gain that weight back. So if you want to be saggy skinny forever, you just have to pay Lilly until the day you die.
I thought that was the point of this in the first place. I didn't realize it was meant to be like you take it 4 times and you're done.
I think the bigger point here is that it seems like the tide is starting to shift at least a little bit. Think about the narrative about these drugs all year. Wonder drugs, they're amazing. You can't find anybody saying anything bad about them. Now all of a sudden, these independent journals, this was the Journal of American Medical Association, are starting to publish not so nice stories and studies about these drugs. Pfizer, we kind of breezed over this headline, I think last week. Pfizer just kind of shut down plans to move forward with their GLP-1 because of the side effects.
Yeah.
So I don't know. It seems like maybe the narrative is shifting a little bit.
I mean, Yeah, the reality is they're like most other drugs in that they work. They're not. That doesn't make them super drugs. They're not imperfect, right? There are flaws. And obesity is complicated because it's part biological, part psychological, and it's hard. So I don't know. We have our guest here, Adam Kos. Should we bring him on? He sent over quite a few charts.
Hell yeah!
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Adam,
hey guys, how you doing?
How you doing, buddy? What's
good? I was really enjoying the conversation you had about Lily and I don't know. Novo Nordisk was on the talking block before I jumped on in the green room, but that's interesting stuff.
People love these things. These stocks have been so good. Mm-hmm. Should we expect them to go up like this forever?
Not forever. I think they're going to keep going up, though. I saw a headline a few weeks ago that Novo Nordisk was basically restricting their supply to only diabetes patients because they just don't have enough of it. It's semaglutide, right? That's the generic name for it, but it's Ozempic, Wegovy, Rybelsus. My doctor clients of mine have said that it does work. Not only does it help people lose weight, but it's reducing their A1C, it's reducing their triglycerides, their bad cholesterol, and obviously when you lose weight, all those things go down anyway. So I'm not sure how much of it's causation and how much of it's just coincidence, but because they're losing weight. But some people do gain the weight when they get off of it, and I think that like anything in life, whether it's taking a fat burner, before your workout, or going keto, or going low fat, or calorie counting with MyFitnessPal, whatever it is you do, once you get close to your target weight, I think you've got to adopt those habits for life. I mean, I don't think that these pills are meant for you to lose, your 50 pounds you've always wanted to lose, and then to get off the pill and then start, eating deep fried Twinkies again.
Right.
Does anyone know how much these drugs actually cost?
The Ozempic's $2,000 a month if your insurance won't pay for it. If your insurance pays for it, it can get priced down to about $30 a month if insurance will pay for it. There's coupons out there that'll get it down to $200.
Diabetes, probably. If you don't have diabetes, then
I think
if you don't have diabetes, they don't want to give it to you. I mean, but there's compounding pharmacies where they mix the compounds together and they'll sell it that way for $200 a month.
Okay.
I was talking to a friend of mine. He works at one of these biotech consulting firms, and he said the story now. He said it's pretty much the stocks are pretty much priced to just own this weight loss thing. But the excitement now, and I guess the bullish story for higher prices in the future, is that it's going to get approved for other indications, from heart disease to kidney disease. He was saying like alcoholism. Sure. So he said it's just much bigger than that. And basically, to me, it just sounds like it's a workaround for people who don't have diabetes. They get it covered for a different indication.
Sure, 100%.
So they're really trying to get this thing out. There's a big push for it. We'll have to wait and see. I kind of hate it. I think made together, these two stocks are like worth $1 trillion. They're just massive, over $1 trillion.
Yeah.
So
I know
Lilly's one of the biggest stocks in the market. So,
how many times have we heard, if there were a magic pill?
Well, there is.
And there is now.
All right, Adam, what's on your mind here?
Oh God, I don't know. I mean, you don't have to go through all the charts I sent over to you. I just figured this last time. We sat here with JC and the two of you and just shot the shit. So I didn't want to, go overboard and just ramble for however much time we have here. But I don't know. I sent you some of our top holdings that we own, our top sectors that we own here at the office. Full disclosure. Some things I'm looking at, which ironically enough is Novo Nordisk and Eli Lilly. I was looking for a nice little pullback to buy into, which we're seeing right now. Yeah. And although Eli Lilly, as you can see there, is kind of, I mean, obviously it's pulling back, but I mean, when you compare it to Novo Nordisk, it's more correcting through time as opposed to price. Yeah. I mean, I suppose we could argue about that, but yeah, I mean, both of these, I thought it was really, really cool that you guys were talking about it when I jumped on, because I have a really high interest in these things just from a supply and demand standpoint. But yeah, both of those look great. I don't know if the international versus domestic story has been going on forever. It feels like I've been doing this for 22 and a half years.
Yep.
And the only time in my, sorry,
throw up chart 11.
The only time in my entire career where we were able to overcome the problem as portfolio managers of home country bias was 2003 to 2008. When overseas markets were beating domestic markets here in the United States. Otherwise, it's been U.S. is the best, for 13, 14 years now. So it was interesting earlier this year when we started seeing that tide change in the biggest and longest way we'd seen in a long time, but it just didn't hold. U.S. dollar kind of held support, rebounded and head back northward. So it'd be nice to see overseas markets as a whole doing better than the U.S. just because it kind of sucks to be a portfolio manager in the U.S. When we could live in like our friends Matthew Verdau and Darren Hawkins over in Europe and Australia, where are you beating the market? Well, we're the ASX, right? We're beating the market. Or we're in Toronto like David Cox. We're beating the market. We're buying U.S. stocks. So it's tough here. Especially when you got a drag and you don't work for charity, right?
So where do you think this one goes, though? If you were to zoom out on this chart, this is as structural of a trend as they come. Looking at almost like 15 years of outperformance from the U.S. Does it ever end? And what do you think like the leadership regime would look like if this were to finally reverse and international kind of takes the lead and starts outperforming?
I think that if international were to take over, we'd see a couple things happen. I think that we would see the U.S. dollar start to fall. And I want to be careful when I say that because I don't like these people that live by extremes and say things like, oh, well, the U.S. dollar is going to collapse. I mean, we're just talking about a reversion in the U.S. dollar, whether that's a 1 to 2 year downtrend or even a multi-year downtrend, but we're not talking collapse. That would be one thing that would happen. I imagine, we would probably see, international stocks perking up overseas due to I don't know if there's going to be any change in politics. I hate to put a story around this because I'm not one for stories. I'm more for technicals. But I think that this is going to be pretty tough to change. I mean, the U.S. dollar's been a beast, and we're kind of like the cleanest dirty laundry when you look at currencies, right? So I don't know. I don't see anything that's going to really stop it aside from just recent resistance.
How about the leaders, right? In a world where the Magnificent Seven stops dominating so much, can't this ratio start to look a little bit better?
It could, yeah. I think because there's a lot of international exposure overseas, especially not just with all stocks, but especially some of the smaller stocks. And I actually do expect to see small caps catch up. I don't believe we're going to go into some big, huge recession and market crash next year. But I'm not a trend predictor. I'm a trend follower. So obviously we're watching price and we're reacting to it, not predicting it. But
how are you approaching small caps right now from a portfolio perspective? I mean, the base in the Russell 2000 still hasn't quite completed. Doesn't look like some of these reversals that are underway in other indexes. But beneath the surface, there are opportunities in small cap names.
Yeah, I mean, if you're looking for individual stocks, I think there's opportunities. There's plenty. I mean, it's like a lot of the stocks I sent you guys. It's just amazing when you just flip through them, and that's just on the most of those stocks are on the NASDAQ 100, but they're. I don't want to say everything's in an uptrend, but I mean, there are some breakouts to all-time highs happening. I mean, a lot of them, and I think that there's still probably going to be a lot of tax loss harvesting happening this month with a lot of those small cap laggards that have beaten people up for the last couple of years, and as people made some money this year, they're probably going to use some of those losses on those small caps and micro caps to wash out some of those gains, which is going to add selling pressure probably this week, next week. I think when we start to see small caps catch up, if they catch up, which I think they will, but I don't know they will, I think that's probably going to start happening toward the tail end of this month into January.
You make a good point, right? Because there was massive profit taking in the leaders yesterday. Most of it was moving into like other large cap leaders. Small caps weren't the ones that were really like, higher. It was just like other stocks in the S&P 500 that were really
there's other things to sell, right? There's other underperformers.
Well, he makes a good point.
Right.
Maybe the losers get sold with the winners, offset those taxes.
Yeah.
And it happens every year, right? I mean, even Stock Traders Almanac has what they call the free lunch trade, right?
Yep.
Where you purposely buy the tax loss harvesters and you sell them a month later for a free lunch, as he calls it. Jeff Hirsch. So
he runs like a scan and basically finds like the worst stuff, like the worst performers. Right? It's pretty good. Pretty good.
Can we bring up chart 3 here, Adam? I just would like your take on Boeing. I was looking at this with Patrick yesterday. We're zooming way out. It's like one of the gappiest stocks there is. It trades like a micro cap. Seems like. But what is your take here?
I mean, it's choppy, right? It's it's very news driven too.
Right.
So, I mean, what I was looking at here, and like we own this stock, by the way, but we purchased it recently. But I noticed the double bottom we saw back, if you scan back in the chart there, and then, the breakout, and then kind of a chop sideways, call it a base for a long period of time there, 6 months-ish. And then what looked like it was going to be a breakout to new 52-week highs. And then it just kind of printed a V bottom there. But I mean, right now it's exhibiting good relative strength. It's in an uptrend by definition, whether it be long-term, intermediate term, short term. So I like the stock.
Talk to me about gold.
Gold. Talk about gold a lot. We'll talk about gold with Market Watch a lot.
Gold.
Yeah. Gold is like the investment that just can't seem to break out to new all-time highs. I mean, there's your highs, right?
12 years.
Yeah. I mean, it's
I didn't see you on Twitter, Adam. I did not see you doing a victory lap that Sunday night of that candle. So credit to you.
Oh, the God camp we had last week. Yeah.
One day is not a trend. I've been watching this line of resistance for a long time, and what we saw, I didn't draw it on the chart here, but you can kind of put together, if you draw a line with your eyes, a cup with handle that looked like it broke out here just what was that, in November, and it's just ran into that ceiling like it's made out of cement.
Mm-hmm.
And I don't know, I mean, that goes back to the international versus domestic story again. I mean, I don't know. I don't have any opinion here. I wouldn't want to own it until it breaks out to all-time highs, where there's no more sellers up there, and you could buy leverage if you wanted to at that point, and then just put your line in the sand at that previous line of resistance. But for now, I mean, you got to
get the breakout. You got to get the breakout.
You need the breakout.
And I like that you used the futures here instead of the GLD, because the GLD doesn't show that nasty price action at the breakout level.
Mm-mm.
Of course, one candle never means anything, but we're talking about a multi-year range resolving. This is literally the opposite of the price action you want to see on that test. You want to see it rip through, a decisive move through it. Instead, we wicked through it, and it got absolutely smacked. You got follow through the next day, and now we're going to follow through again here this week. So this could take months. It could take quarters. It could take another year.
It could take years, yeah. I mean, well, I didn't even scan all the way out. I mean, there's more behind this thing, right? You guys have seen it.
Yeah. And then, so if you were to add it to your portfolio, you do it through GLD, do you do the miners? Like, do you have
the miners don't look as good as the gold does on its own. So, if I had any interest in gold, which I don't right now, then I'd be looking at GLDM as in Mary. It's a lower priced gold ETF. But,
what is that's
GLDM?
But it's spot gold. It's like GLD.
It's like GLD, yeah. GLD, IAU, it's the same thing. Yeah.
Got it.
Adam, give us something that's like not working for you right now. What's not working?
What's not working? Ooh, I wasn't prepared for that.
Right.
International, I guess that might be the biggest one.
Yeah.
I mean, we talked about that. I guess we already talked about it a little bit, but I don't know. One of the biggest no-nos in technical analysis is to hope anything happens, or to think something's going to happen, or to like something. I really like that stock. No, you don't. You shut the hell up, So I really, if I'm being honest, earlier this year, I really hoped that international was going to take over. The U.S. dollar was going to break below that floor of support, and that it was going to be like shooting fish in a bucket, picking international stocks. And it just didn't. We got international versus U.S. got whipsawed. We're right back to where we were again. U.S. in an uptrend. So that's not working. I'm trying to. I can pull up a couple other things that aren't here. Sorry, I wasn't prepared.
It's okay. Now the PDD is working.
PDD is working.
PDD is working.
Very few.
I mean, I sent you guys all the stuff that's working, which is most of it, which is good. Yeah. Some things that aren't necessarily working are, in our strategic models, we own Merck, but we don't own them in our tactical models. Merck's kind of ugly.
Yeah. At least it's not Pfizer, though. At least
true story. Yeah. Caterpillar is another one. Owned it for a long time. I shouldn't say a long time. Owned it quite a while. I mean, my average holding time is between 6 and 12 months. So, when we start owning something for beyond 6, 9 months, that starts to feel like a long time. But Caterpillar isn't exactly behaving like I'd like it to, but it's still hanging in there. What else? Atlassian, the symbols team. That's not pretty. It's one of those higher S stocks that's again hanging in there, but it's staying in an uptrend, but it's kind of boring. It's one of those ones you keep staring at, and you want to sell it and override your rules, but I've got to hang on to it until my rules say it's time to pull the chute. So yeah. So those are a few positions that aren't working.
Are you dabbling at all in some of these speculative tech or growthier names, Arky stuff, biotech?
No, I'm not, and I appreciate you asking that. And I've got a good answer. A lot of the guests you have on the show, a lot of I should just say our friends, right, that we have on the show are people who they're in research. If they're managing money, they're managing it, whether it be in hedge funds or private money, and while I'm managing, I'm a private portfolio manager. We're managing, retail client assets in, retirement accounts, trust accounts, 401ks, things like that. And, I don't, most of our, if I buy things like that, it's going to be in our aggressive portfolio. And if you look at all of our clients and how they're allocated in our models, I mean, it's exactly what you would expect. It's a Gaussian bell curve with most of our clients' assets in the moderate and balanced models, and then very few in the conservative models and very few in the aggressive models. So I'll take some chances. I'll use some leverage.
Do you find your clients have a good understanding of their own risk tolerance?
Oh, that's a good question. I think I think they have a good understanding of their risk tolerance at the time we're discussing their risk tolerance.
Oh, okay.
I think that what happens, this is not my clients, this is all clients, this is humans. Right. I think what happens is if you were to fill out just one of these, standard risk tolerance assessments, and you did it in right now, your answers would be different than they were in summer of 2022.
Sure.
So their risk tolerance changes depending on what the market's doing, what the news is. And so unfortunately, that's something that it's kind of a moving target we have to deal with on a regular basis. And we always kind of have to be on our toes. We had several people this year who even though the market's recovering, right, it's doing better. We had several people this year who, because rates have gone up so much, I can't believe I'm going to say this on air, but I don't like annuities. I don't like fixed annuities. I don't like variable annuities. Generally speaking, they're very expensive investments, but I have to recognize they serve a purpose for the right people, and they serve a purpose for the right objectives, and for people who are scared to death of the market, people who are a little bit antsy. They look at their accounts maybe a little bit more often than others. We're looking right now at equity indexed annuities paying a 6% guarantee, or there's 3 buckets: a performance trigger at 9%. So if it's up 0.1, you get 9, and then a cap of 10 with 0 downside risk. And that's, for the bond portion of a client's portfolio, that makes a lot of sense to get equity-like returns, but with no risk. So whereas the bond market offers plenty of risk, and we didn't even talk about the bond market today, but I think that this year is the first year in my career, that rates have gone high enough to where it makes some of those things look attractive. And as a result, even though the market's doing better, we're seeing people almost like whether it's because of COVID, fourth quarter 18, recent memory of the Great Recession, mortgage crisis, they want to be a little bit more conservative because the news is just driving them nuts, especially politics. And that drives me crazy. I hate it, but it is what it is.
If I could guess, I would think that you're probably, how long have you been doing this for?
22 years.
So, God, have you ever had more questions or inquiries about fixed income assets? Do you have clients coming to you and saying, hey, I hear so-and-so is getting 5%. Are we in enough bonds? Are you, people asking about money markets, and what does that look like?
Yeah, I mean, it's you're 100% right. It's kind of like the days of I wasn't in the business in the late 90s, but I heard plenty of stories about people saying, hey, I really appreciate my 20% return, but my neighbor's financial advisor's getting them 25, so I'm leaving. It's like, you got to be kidding me. But yeah, no, we get a lot of questions about, hey, is it better just to leave the money in a CD? Is it better to be leaving my money in a money market? And what we're doing at our office, we we have plenty of clients who are retired, and we like to have some gunpowder. Where if the market does take a downside, you've got something that is guaranteed. And right now, things like JPST, which I don't use that, but I use BIL, which is basically short-term treasuries, 1 to 3 month treasuries, and paying 5.4% right now. That's about the best thing you can get. I also, we have a few clients. Part of our business is helping companies grow and sell, so exit planning.
Yep.
And we have some clients right now who are, well, I guess we always kind of have some clients that are paying taxes. They're going to owe taxes in April on the capital gains of their business. And then I'll throw that literally into a T-bill. Like I go out and buy a physical, T-bill going out, say, with a 3/15 maturity or something like that before tax time, just to try and reduce the capital gains tax effectively through, T-bills. But
that's a nice trick.
Yeah. Well, but the problem is you got to pay tax on the T-bills too.
Right, yeah, there you go.
But it does help. Yeah.
Yeah. For sure.
Yeah, hearing about rates and haven't heard as much about bonds being decimated as I thought that we would. We haven't owned any bonds in our portfolios since November of 2021, with the exception of 2 weeks this summer. I tried to go long pretty heavy and then got stopped out literally within 2 weeks.
I could see exactly. You were buying the lows from last year, right? In TLT?
Oh, yeah, you're right. 100%.
Got blew right out. We knew we were wrong pretty.
It was all exciting,
Yeah.
Then it wasn't. But when your maximum loss is 1.5%, 2% at most, I mean that's a good loss, right? Oxymoron, but
no, it's true.
Do you have any thoughts on the cryptos?
I haven't been honest. This is probably sacrilegious. I have not been following them a whole lot. I mean, let me pull up Bitcoin here on
have people lost interest?
It's probably good for your
mental. I think so. I mean, it's kind of like remember all the memes from Thanksgiving from 2018 with Forrest Gump running away, from the Thanksgiving table because everybody wanted to get their friends into Bitcoin. Yeah, EBTC. I'll just look at the ETF. Yeah, I mean that's definitely an intermediate term uptrend without a doubt. But there's this things that I'm looking at GBTC. It's trading at about 32-ish, 33. And I guess your next point of resistance probably is 55-ish. Whether it gets there, I don't know. I mean, I don't know. I'd be interested to see some statistics, and I don't know them on what the Twitter interest is out there. I guess they call it X now, but
hi.
I don't know. I don't know if the interest is out there like it used to be.
If a client
I've got client stories about Bitcoin, and they're not good. Unfortunately,
that's always fun.
It sucks. I mean, it's bad, man. We have to talk about that off air. It's bad.
I want to hear it. If a client wanted crypto exposure, how would you do it? Would you use GBTC, and would you consider something like MicroStrategy or Coinbase?
No, I wouldn't do that. It's just regulatory reasons. But we'd be looking at an ETF if we were to get exposure.
One of these new spot ones, those will be pretty good.
I'd be fine with that. Yeah. I mean, I'd actually like that better than GBTC
or a futures ETF.
For
sure. Yeah.
All right. Cool. Adam Kos, Libertas Wealth Management, at Adam Kos on Twitter. The link is below in the description. Always a pleasure, sir. This is fun. Great stuff. Chat loves you. We love you. And
thanks so much for having me on again. I always have fun.
I'll reach out for those crypto stories off air.
Yeah. Sounds good, man.
Thanks.
All right, we'll talk to you guys later.
All right. Did we have anything on the hot corner today, Steve? We did have a notable insider sell by a certain person.
Who?
Warren Buffett.
Oh, the HP stuff? Yeah. So read the headline.
Berkshire Hathaway trimmed pretty significantly their stake in HPQ.
I heard like 50%.
It was about half. Yeah. They went from owning 97. They went from owning almost 98 million shares Now they own 51 million shares. So it was just about a 50% cut in their stake.
It looks okay when you zoom out. Chart looks pretty good. But oh well, it hasn't been working, right? So much other stuff is really working this year. HP's not. It's opportunity cost. But yeah, when you zoom out, that's a beautiful base. And once it does get going, we love buying charts like these, right?
You don't see too many mid-quarter filings from Berkshire. Anyway,
give me the Seattle Genetics Pfizer headline, and that will segue us beautifully into the hot corner.
Now look at that. The headline's on the screen. Beautiful. I don't even have to do anything. Look at that. Another day, another deal, another dollar. Pfizer's buying Seagen for $2.29. This is a cash deal. So
probably it's finally done too. It took a while to get approved, but they got the all clear from regulators.
Yeah. So not much more to say about it. Cash deal, it's over.
You got the little pop basically to the buyout price, which is $229 a share. I had to like donate profits to like some drug just to get this done. The bigger point here though is right before we jump into hot corner. Actually, run the bumper. This is part of hot corner.
Okay.
Hot corner. So hot right now.
Okay. So people ask me all the time, why do you love Baker Bros so much? What is so good about Baker Bros? Why are we following Baker Bros so closely? Because they do this all the time. A lot of these, I'm not concerned with Ryan Cohen's SEC filings, what he's pumping and dumping. I'm not concerned with what Michael Burry bought or sold this quarter. Not nearly as much as mainstream media is. I don't care what some of these masters of the universe like Steve Cohen and these other long-short fund managers are doing, because they're in and out really quick, right? The real value in any, in any insider filing comes from being able to understand the filing and the conviction behind what it's reporting, okay? In other words, somebody like Warren Buffett or Berkshire, when he's buying a big stake, he's going to own it for a long time. These filings come out 45 days late, the 13Fs, right? So to see most positions from these big institutions, you have to wait 45 days. Long short fund is probably already out. Warren Buffett, that makes sense. Baker Bros, even more so. They started building this stake in Seattle Genetics around the great financial crisis. This has been a 15-year trade. They really got big in it in about 2013. I've highlighted their average price paid for these shares. They've accumulated, over a very, very long period of time. But I highlighted on the chart just to show how much money they've made over the course of 10, 15 years while they've been in this. They've gone like 7x on this investment, Spencer. The average cost per share is $33.50. It's getting bought out today for $229 a share. Baker Bros owns 24% of the outstanding shares. It's worth more than $10 billion.
Is that a lot? Sounds like a lot.
It's a quarter of the company. It's 54% of Baker Bros AUM, more than half of their fund. Right? So this is the kind of firm that when they report their positions in their 13Fs, you can literally look and say, oh my God, the conviction that they have in Seattle Genetics, that they own this much of it, they have this much of their fund in it. You know exactly what bet they're making. And they hold positions like this. This was 15 years.
Their average price is 33-ish.
$33.50.
And this thing went off the board at 229.
They made $9 billion in this. And they buy it, they accumulate it, they hold it, they wait, right? And now they're getting profits at 7x, 600% gain on this position. So this is why we pay so much attention and pound the table constantly about what Baker Bros is doing. We've seen this before. This is just the latest example. We'll see it again, but this is why we are very obnoxious about the moves that this company makes. The more you follow these insider filings, I've been doing it for a decade now, the more you just track these things, you get really, really familiar or accustomed to what companies are the ones to follow. And you don't want the guys who are in and out. Like I said, Michael Burry gets the headlines. Literally, there's no value to that information. Baker Bros is going to buy something, accumulate a massive stake, hold it for a decade. Follow these guys, right? And there are others. There's other value managers and guys that you can follow. But Baker Bros has a way of making massive bets in stocks that just go, in this case, almost 10x. Right?
Wow.
They have a history of hitting home runs like this over and over and over again. So that's why, we value those Baker Bro filings the way that we do.
Credit to them and credit to you for highlighting it, because the results speak for themselves. So what else do we have here? Anything notable on the hot corner scan today? Any Baker Bros like activity?
Well, we had nothing nice to say about the electric vehicle makers.
No, we didn't.
Do we have anything nice to say about these traditional automakers? Because the chief EV digital and design officer, mouthful, would you accept that title? If a company hired you and said, you're going to be the chief EV digital and design officer.
Yes. Titles are meaningless. I would accept any title. Who cares?
They couldn't find a better name?
Who cares?
We were talking about the titles with the analyst team. I think in 2024, I'm going to stop being director of research.
You can be whatever you want, man. You want to be like chief people officer?
No, I'm
want to be head of fun?
Chief people officer. I'm going to be chief YOLO officer. So
That's
my
fine.
title's going to be CYO.
That's okay.
We're YOLOing in 2024. So this guy, I forget his name, John Douglas or something, was YOLOing Ford stock. No kidding. But he bought a lot, $2 million worth just last week. Filed the form for Ford is scooping and scoring. Do we have the chart? Throw up the chart. We got a huge shelf of pivot lows there. I mean, squeeze city. No? No? Little bear trap? Little bull hook? Get some. 1150 will get you done. 1125? Yeah. Why not? You can take shots like this in mean reversion setups or counter trend trades when it's a raging bull market and things are working. I would green light this kind of stuff. In a different kind of market, no way. But in this kind of market, when everything's just really starting to work, you're seeing that participation broaden, you're seeing laggards play some serious catch up. Why not take a shot on this? I don't know.
All right, I've played it forward before. All right, you're doing not the worst job of talking me into it, but God, I hate the stock.
Back to the table. One more takeaway too from yesterday. Just a lot of bullish call flow. We don't see unusual options activity in this kind of size on a daily basis. We're very selective, or I'll say Milton over at the Trade Exchange is very selective. He does such a great job at this. He's not putting in just anything. So this is another one of those data sets that we can look to because we've been staring at it for so long, years and years. I've been looking at this for 10 years now over the Trade Exchange. You don't get lists like this. So this is more bull market behavior. People are getting more and more aggressive. They're not just trying to put on size, they're trying to put on leverage. And the options market, activity is reflecting it.
That's interesting. Yeah.
PayPal, huh?
Yeah, we didn't even talk about PayPal. They had news on Friday. PayPal closed green on Friday on a headline that Venmo was being removed as a payment option from Amazon. When they announced that partnership October of 2022, that headline was worth a 10% premium in the stock. And then they announced a year later that they're ending it, and the stock not only does it not go down, it goes up. So I don't know what to make of that. But
at a certain point, right? If it's a quality company or if it's a company with some sort of value left, at a certain point when you're down 80%,
I don't know.
The bad news just becomes less bad. It's all baked into the cake, and that's what you're slowly starting to see from PayPal. But boy, I mean, I would pull up a chart of Square. Every time you want to think about buying PayPal, look at what Square has done. And that stock looked just as bad not long ago. But you're getting a much bigger move off of those late October lows in something like Square than you are in PayPal. So I don't know. Opportunity cost to these kinds.
I don't know either. All right. If you guys want the hot corner, our landing page for that should finally be done this week. But if you, in the meantime, email us questions at stockmarketmedia.com and we'll get you on the list. We have Patrick here. You want to talk chart report?
Good. Yep.
Come on. All right. Pat, you ready? We're bringing you on.
Fellas, how we doing?
What's up? Oh, how we doing?
No stress. I guess it's just you and me. How you doing?
No, that's the beauty of the show is you can just kind of come and go as you please, right? You can be on, you can be off, you can be on, you can be off, and we're all remote, so can't really stop it. You know what I mean? He's in Florida. You're in Cali. I'm in Jersey. It is what it is. Anyway,
Adam did a great job. That was, I liked hearing like kind of what his clients are thinking. Kind of a boots on the ground perspective. I like that.
Yeah. I think in hindsight, we probably spent like too much time like talking about like stocks with him, because I would imagine most of his time is spent not thinking about stocks, right? It's
right. Individuals.
About, right. Especially if he's dealing with retirees and that stuff, then.
But he can riff. He knows his stuff.
Sure. All right. Chart of the day. Do you want to start there? Is that where we're starting?
Yeah, I mean, the big theme of the day yesterday wasn't really reflected in chart of the day, but the big theme yesterday was, Mag 7, all the Magnificent 7 completely sat out. Every single one of them closed lower, while the NASDAQ and the rest of the market closed positive. And, for the last, 6 months, all year really, people have been complaining about the Magnificent 7 leading and saying that it's only the 7 stocks, all that. And yesterday it was almost like the market heard that and just went the opposite way. You had all 7 down and the market's still closing positive. So yesterday was kind of proof that we don't need the Mag 7 to go up all the time.
Well, over the course of one day, sure.
Right.
But
I mean, of course, over
for a
time,
week,
they can't crash, but
yeah. I know, but now I want to see it. Give me a week. Give me a week of steady underperformance in or consistent, 0 to 1% down performance in the Mag 7, and then I want to see what the indexes do over the course of that week.
But see, that's the thing. You're not going to see this straight thing. It's that rotation, and that's what kind of keeps it bullish over time. Is kind of one takes a break, the other one rests up, and then the other one takes over. So that kind of push and pull over time is good.
Ooh, I always love Charlie does these a lot. I don't know Charlie below. I'd love to get him on the show though, but I love these charts. I love these stats. Just looking at the rotation over time.
Yeah, I think the interesting thing there is like you almost never have it's not static, right? The top 10 or even the top 5, it changes a lot. You almost never have these scenarios where it's just the same top 10 for a decade or more.
Yeah, of course. The other argument is well, no, but this time is different because today's biggest companies are bigger than yesterday's biggest companies. But we'll see. Obviously,
Mark, bring your chart request to Chart Request Live at 1 o'clock today, 1:30?
1 o'clock with these two fellas.
Hey, ITB.
Yes.
Well, so Mark's asking about the home builders, and that's another interesting theme. I think, we saw semis and home builders. Those were the 2 leaders in the first half of the year. And that was a really positive sign for the market. I can't think of more important sectors or industry groups than that. I mean, Steve, can you? Home builders and semis, those are really economically sensitive, important areas. And those led in the first half. They took a break in the fall, August through October. And now they're taking leadership again in a really big way. So, XHB actually breaking out this time, whereas you didn't have that in the summer when ITB, the other home building ETF, broke out. So now you're kind of having confirmation with the home builders too.
I think those groups would be number 1 and 2 on my list in terms of pro-cyclicality.
Right. Yeah.
There's obviously an offensive bent to anything that's pro-cyclical. So there's some of the most offensive or most risk-on stocks. Always good to see them lead. And we had this massive move from home builders. Just coming off the October lows, it was like a gap open every single day with these home builders. Just look at the action off the October lows. It shouldn't be any surprise that then semiconductors finally had the day that they had yesterday and are playing catch up, right?
Right.
So these leaders leading, interestingly enough, the biggest and best names though, like Nvidia, not participating, right? Like if you
right. And I would argue that's healthy, right? Seeing that kind of, and as Spencer and I were talking about before, like we don't want to see Nvidia never participate. But seeing that kind of, them taking turns like that, I think that's really constructive.
Absolutely. I think money is just rotating, right?
Yeah.
Profits are being pulled a little bit and moved into maybe other stuff that has some catch up to play. Very, very constructive and just bull market behavior.
It's rotating, but it's not coming in. Wait till it starts coming in. You know what I mean?
All right. Our thoughts on AI? I don't know. What's AI?
Like the stock AI, C3 AI, or like the idea.
This is not for chart requests. That's
No, hey, if you guys have requests, sometimes we do a couple on this show, but more often than not, we don't. We do an entire show devoted to this every Tuesday and every Thursday at 1:00 on this channel. It's called Chart Request Live. So stop by then.
One thought on AI though is it's amazing to me how it seems like the mega caps really won this. Like it in other kind of manias or 3D printing, for example, or EV stocks, you had all these small little ones, and you have a few small micro cap stocks that are definitely benefiting from this whole AI hype, but for the most part, I think the biggest beneficiaries of it have been the mega caps.
Why is that amazing? We've been saying that would happen all year.
No, I mean, you're right, but I guess in terms of like bubble action, like you're not seeing as many like just micro caps like changing their name to something AI. You're seeing a little bit of that, but not as much as I would have thought.
Here's the thing about getting into the AI space. It's really expensive.
Yeah.
It's really expensive.
Mm-hmm.
That's the thing. So there's a handful of companies that can more than afford to take shot after shot after shot and maybe have 95% of projects go to zero and not work and have that one work.
That's basically Google's business.
Yeah, I was gonna say.
That's more or less Google's whole business is take 1,000 moonshots. One of them will work. It'll make you $1 gajillion, and you're fine.
They've earned it. What they do, right?
Yeah.
So how about the Apple news while we're on big cap tech? I mean, just the latest power move from one of these guys. Did you hear about this? The green dot situation with the Samsung messages?
No,
I don't know. I don't know what you're referring to.
All right, somebody's gonna have to help me explain this. But if you don't have an iPhone, right? You don't have an Apple. You don't have the same iMessage like read receipts. How you could like tell if somebody's reading your messages.
the green text, yeah.
Yeah, they're like a different color. You could tell if it's a Samsung.
Yeah.
So somebody built an app to basically create a workaround so it doesn't look that way. So you would have a Samsung, you'd be texting somebody with an iPhone, and it would look like you have an iPhone too. The same bubbles and read receipts.
Okay.
Make sense? Apple doesn't want that.
Yeah.
Apple likes the fact that there's this stigma about having the green dot.
So it's not so much it's not so much a Samsung thing. It's an Android thing, right? It's an Android because if you don't have you don't have iOS, it's green. If you have iOS, it's blue.
So people were downloading app to work around that, so that even if you don't have iOS, it would be blue and look like you have iOS. Apple came in and said, "Get out of here."
So this is dumb. This is dumb.
Well, is it dumb? It's just what they could do.
This is dumb.
These are the things that they can do.
This is so stupid. Because forgetting how it looks, like the color of the damn bubble, there are actual, there are actual technical things that make it somewhat inconvenient to, like, for example, if you're in a group chat with like half iPhone and a half Android, it can be a little wonky, and I would argue that's more important than the color of the damn bubble. But whatever, to each their own, I suppose.
Make it easier for people with the Samsung messages is the bottom line.
Whatever, I couldn't care less.
It shouldn't surprise you.
I did see. Speaking of Apple, that they're I guess they're relaunching their iPad line. I didn't realize that was an area of confusion, but I guess it is. So
relaunching it. It never went anywhere.
They're doing something with their, as far as like their iPad models, and I didn't look too closely into it because iPad doesn't move the needle for them, so I didn't really look too far beyond that. But I actually just threw away I had an old iPad. I just threw it away like 2 months ago. I had like a 7-year-old iPad. It did not work anymore. So anyway, okay. What else?
Hold on, I got a headline to read.
Yeah.
Citadel is expected to return about $7 billion in 2023 profits to investors, sources say. This is from WSJ. Citadel's flagship fund is up nearly 15% through November. Citadel expects to manage about $58 billion to start 24. Citadel is planning to give its investors about $7 billion in profits it earned in
just really mega caps taking a break and the market being fine with it. I mean, that was the biggest takeaway from yesterday.
All right, guys, if you want to get the chart report, it's free. Pat sends that out every single day or after the close. You can get the link. It's in the description below on YouTube. I'll throw the link up on the screen via a QR code. There it is. You can scan it. You can join. Get it every single day, usually around 5 p.m. Eastern.
It was a late one yesterday, but yeah.
Late one yesterday, but yeah, okay.
Guys, do you know it's a bull market when even Beyond Meat is going up? This thing has a 45% short interest and basically a double off.
I didn't know about Beyond Meat, but have you seen Snapchat of late? Holy moly.
What's the short interest in this one?
I don't know.
Should be on here.
I mean, Snap looks like a lot of other kind of ARK type stocks.
I don't know if actually no. I think you're right. I think ARK has owned Snap at some point.
It does.
Short interest is about 8%. I'm seeing short percent of float on Snap.
They had a big gap from May 2022. I forget how much it dropped, but it was pretty bad, and it's trying to fill that gap now. But
May of 22, it went from
43% in a day. It fell.
Yeah, well.
Oh yeah, we got to throw the volume at price up on this one. Nice little memory gap there, right?
Yeah. And Steve, how do you treat those? Like, do you think of them like vacuums, or do you think of them as more supply there?
Oh, no supply there.
Right.
Yeah, like a vacuum. You treat it just like a gap, a memory pocket. In essence, same thing. C3AI also on that short squeeze list. Can we throw up the short squeeze list, maybe?
And then afterwards, because I'm flying blind here, can someone just tell me what's happening out there in the market? I don't have any real time charts.
I don't know how you
pretty flat.
No, there's other websites you can go to.
I know, but I'm very used to my Thinkorswim, and I like it the way I have it the way I like it. And I could I could look at TradingView. I have that open too, but I use that for a specific thing, and I don't want to mess up the way I have it all set up. So
gasoline looks like it's going. Energy is lagging today. Looks terrible, down another 1.5%. I think these tops probably start completing. Do we have that gasoline break evens chart somewhere? Oh God. Here, let me drop it in. This is really what I'm watching. I think there's some great information in gasoline right now. In gasoline and break evens. And I love what Jason was saying yesterday. Here, Alfonso. Could throw that up. So these two charts are not going to resolve in different directions. This is the break-even inflation rate, 5-year break-even inflation rate. This is gasoline futures. Gasoline down big again here today. If these tops go, do the tops in all those energy stocks that we're talking about go? Yes or no, guys?
Yeah.
Yeah.
Right?
Sure.
Well, these are the weakest ones, or the worst looking ones. Gasoline, I know the 5-year break even is an intermarket data point, but gasoline's the weakest one. And look at it here today, down over 2%, hitting its lowest level since December 2021. So 2-year lows. And gosh, if that support level goes there, yikes. Look out. You would think crude oil follows. You would think these tops like the one that we've discussed in Oxy so much probably resolve lower. And then it could be a pretty crappy year for energy if that stuff starts happening.
Yeah. All right. Something to keep an eye on. Sure.
But in terms of the market today, Spencer, sorry to answer your question.
Yeah.
Financials flat, industrials flat, real estate just about unchanged, and then everything else kind of slightly lower from cyclicals, materials.
Okay. All right. Good to know.
The dollar and interest rates kind of getting a little bit of movement there.
Well, we do have a Fed tomorrow. Well, today and tomorrow, but
the announcement should come tomorrow in the presser, right?
Yeah, tomorrow too.
The meeting just starts today.
I've been keeping an eye on the future, the Fed funds futures. The odds of a rate hike they keep getting pushed out. You notice that?
A rate cut.
Sorry, that's what I meant. Rate cut getting pushed out a little bit at a month at a time.
Things are looking good out here.
Yeah.
They call that is that what they call a soft landing? That's the soft landing they're talking about?
I thought that's higher for longer. Is it no? I don't even know. I don't even know anymore.
I love that none of us know. That's great.
Ideally,
no, I think it is a soft landing for real. That's what it is.
I could talk about this fade the street list. If nobody did anything.
The only other thing I had on my list was Hasbro doing layoffs, laying off about, what was it, like 1,000 employees, 20% of their company, which like sort of blew my mind. Sometimes I just like don't think about, or I never think about really, like just like how large some of these companies are in terms of employees. Like Hasbro, a company that I never think about, has 5,000 employees. You know, it just, you know, like who plays with toys? I don't know, but it sort of boggles the mind.
They own Barbie, right?
No, that's Mattel.
Ernst & Young also announced some big layoffs.
Yes, they did. So anyway, Hasbro doesn't look good. Mattel also doesn't look good for that matter. Neither of them look good. So just thought I would mention that. But no, nobody plays with toys. No, kids don't play with toys. Are you kidding me? Kids play with iPads. Anyway, that's
Steve,
all.
I got a question for you. How did you like, or what did you think of kind of the reaction to Bitcoin yesterday? You know, it was like the worst day in a few months yesterday after a ridiculous run. So what do you think? Do you like how it reacted? I mean, it was due to pull back eventually.
I didn't think about it. Here's what I thought about. So over the trailing 24 hours, XNO is up 35%. Adam is up 20%. Koos is up 18%. Fetch AI is up 12%. Avalanche is up 12%. Phantom is up 10.5%. Cardano is up 9%. Picking up what I'm putting down?
Yeah.
Same kind of rotation that we saw from the leaders in the stock market yesterday.
Yeah.
In other words, it's rotating. You're still seeing a really strong bid beneath the surface. In fact, I think it's very constructive to see that participation broaden. Just like we're talking about in the stock market, we're seeing it in cryptos now. We could throw up the altcoin index and remind everybody that beautiful reversal we have there. I think we all know what it looks like now, but more and more alts are just joining the party. And this avalanche, guys, wow. This avalanche is just relentless. It doesn't go down. Look at those wicks. Every little sell-off, even intraday sell-offs, are getting bought right up.
Wow.
You know who's not joining the party is Binance Coin.
Yeah, why would you do that to yourself? Right?
I don't know.
I know.
Dude, it's up like AVAX is up like 100% in 12 days, and it's had one down day.
Yep.
Wow.
You know what? And I'm liking this Cardano too. Cardano's really shaping up nicely here. It's got a beautiful base. That's ADA. But listen, that's going to be the case. And as this crypto thing enters, the middle and later innings, you're going to hear about, these alts and these shit coins that you've never heard about before, and they're going to be up thousands of percent. Mm-hmm. And you do want to be careful with those names, but I'm sure there's going to be plenty of beta and plenty of juice as you go down the cap scale, right?
Yep. All right, time for recess, we think? I think.
Yeah, we want to do Fade the Street tomorrow then?
Yeah, we'll do it tomorrow.
Okay.
All right. About annuities for a quick second with Adam Kos. Big day for annuities yesterday. One Shohei Ohtani got himself the world's biggest annuity of all time. I don't know if you guys saw this. He, of course, signed that $700 million contract over the weekend. And then they announced yesterday that he is deferring $68 million per year of that contract. So he's going to get paid $2 million a year for, I think, the next 10 years. And then $68 million a year for the 10 years after that. And
This is the biggest deal ever.
it's just absolutely wild. Like this was the perfect headline for my X feed because I had all my sports people and all my finance people chiming in on the implications of this for like the Dodgers and just for like Shohei himself. Somebody making the great point that if he moves out of California for before the annuity kicks in, he'll save like a shit ton of money on taxes. So just wild stuff, like total circumvention of the luxury tax threshold there they have in baseball because they don't have a salary cap, but just absolutely insane deal that I thought was just wild. And congrats to Shohei. It just boggles the mind that they're doing it, but they're doing it. So good for him. I just thought.
So the Yankees are going to be good again?
Are the Yankees going to be good?
Yeah.
Yeah. I mean, their window is rapidly closing, so they really only have probably a handful of years left to get it done with the current roster. So they should be good. I say that every year, but they should be good. Well, ask me again in the end of March and start of April. But yeah, totally. Sean's saying the Dodgers will be screwed after he retires. Certainly they're not going to be not screwed. But I guess will it matter if they win a few World Series? Probably not. Yeah, so pretty remarkable stuff there. And then somebody mentioned the Dolphins earlier because JC is not here. I don't know if you saw the end of that game, but Dolphins, I think, what did I see? I saw a stat about this. Let me pull it up real fast. That the Dolphins...
Wait, they blew it?
Dolphins blew it. Let's see. Hold on. I have it right here. Let me find it. Okay, entering Monday, NFL teams had lost 767 straight games when trailing by 14 or more points in the last 3 minutes of the game. The Titans beat the Dolphins last night after being down by more than 14 points with 3 minutes to go in the game. So
I stopped paying attention. Wow.
They were down by 14. So they were down by 14 with 3 minutes to go, and they won the game. So tough game for the Dolphins.
Wow.
Yeah.
All right. Hey, listen, speaking of football, speaking of New York sports teams, throw up this picture of Tommy Salami and his agent. Really exciting stuff.
Do we have it? Oh, look at that picture. It's beautiful.
Can't make this up. Just go check on the Twitter. These guys broke the internet last night with the
amazing.
Yeah, really good. Everybody's having a good time in New York right now. So.
All right. I finally hooked up my mixer and my soundboard. So any suggestions for sound effects, I'm all ears. Let us know what you'd like, and I will add it, and we can get some fun stuff going.
Wait, are we finally going to hook up my mixing board?
Yeah, I had to get mine out first, but
can you hear it?
A little bit. It's okay. It's not, it's not amazing, but yeah, we'll have to work on yours. Anyway, a reggaeton horns. Anytime Strazza places a trade. No, I like what I have in mind in my head is sound cuts of the guys, right? So every time, so JC, how he says like, "Oh, hey JC," a lot, so we'll have that going, and you can do that.
Yeah, like the clips of things that people say.
Right. Exactly. Anyway, that's what we got. So it's Tuesday. So Twitter Spaces with the chart report at 11 a.m. Eastern time.
One of my favorite things to do. So Tuesdays are the best, aren't they, Patrick? Because
Tuesdays are great. Yeah.
Are they your favorite?
We get to riff later. We get to do our favorite show, people show.
I mean, they fly by. They fly by because we're on video the whole day. But
is it because you multitask, Steve?
It's hard to multitask. I think we do a good job multitasking when we do this show, but like something like CRL, you're locked in.
Yeah. Yeah, that's right. All right. Spaces at 11. Chart Request Live right here, 1 o'clock Eastern time. Thanks to our guest today, Adam Kos, for hanging out. Thanks to all of you in the chat. As always, hit the like button. email us any questions, comments, concerns. You want more research? You want the stuff, you want the good stuff, the stuff that we keep behind a paywall? Let us know what you're interested in. We can maybe hook you up. Email us questions at stockmarketmedia.com.
I heard I got some new stuff coming too.
We got some new stuff coming. I don't know. Just a tease.
All right. Careful now.
I know. All right, everyone. Go make some money.
Bye, everybody.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go